Hello and welcome to the Global Viewer on this Wednesday. I'm Andrew Gagan. Good to have you back here at AusBiz as we get across what we're seeing more globally. Stocks little changed overnight essentially, while Treasury yields in the States did edge higher as investors assess the impact of the latest US tariffs. Investors on Wall Street were watching testimony from Federal Reserve Chair Jerome Powell for signals on rate cuts. Main indices finishing in mixed territory there as investors also focused on the latest earnings results. Coca-Cola shares, they rose as the beverage maker beat fourth quarter revenue estimates helped by higher prices and strong demand. Tesla shares reversed sharply after a consortium led by Chief Executive Elon Musk offered $97 billion to buy AI startup OpenAI. Apple rose on reports that it's partnering with Alibaba to develop and roll out AI features for iPhone users in China. And Phillips 66 rising after activist Elliott Investment Management said it had built a stake of some $2.5 billion in the oil refiner. Elsewhere, DuPont shares, they surged as the industrial materials maker raised its 2025 profit forecast. Water tech firm Ecolab also rallied, forecasting higher than expected adjusted profit for 2025. And Fidelity National Information Services shares plummeted after the banking and payments processing conglomerate forecast first quarter profit below estimates. Well, US Federal Reserve Chair Jerome Powell has appeared before Congress, reiterating that the FOMC will be patient before lowering the policy rate further. Asked whether President Trump's imposition of tariffs on trading partners and commodities may lead to higher inflation, he said, well, it is a possible outcome which will depend very much on specific facts of what goods are taxed and by how much. The standard case for free trade logically still makes sense. Meanwhile, US small business optimism has fallen more than forecast, with capital spending plans falling the most in 30 years as companies take a cautious outlook amid policy uncertainty. On the Treasuries, the 10-year yield extending gains up to 4.53%, the 2-year holding at around 4.29%. And the US dollar has eased as traders wait on more detail of potential trade tariffs. The Aussie rising to 62.9 US cents, and Bitcoin falling back to 96,000 US dollars. Now, prices of industrial metals in the United States have extended gains in the wake of President Trump's 25% tariffs on steel and aluminium. Oil prices also have climbed to a 2-week high as sanctions raised concerns about Russian and Iranian oil supplies. Brent futures up 1.5% to $77 a barrel. Copper has retraced its gains, falling 2.5%, while iron ore is down around 1% to $106 US dollars a tonne. And the gold price has slipped as investors take profits following another record high. US gold futures around 0.1% lower at $2,932 an ounce. So let's get across what we're seeing in markets with the focus on the States. John Blake joining us from Zacks Investment Research. John, welcome back. Now, it's all about tariffs and Donald Trump. How are you seeing this play out on markets at the moment?
Andrew, you threw an interesting fact out that segues with the Federal Reserve really well. It's the 2-year Treasury note at 4.29. The federal funds rate, Andrew, is 4.33. So what that tells you is what I saw in the CME Fed Funds futures as well, which is no one's expecting any rate cutting for the next 2 years, Andrew. And if there is one, it'll be in July for 25 basis points, and that's it. So I think the big news here is so much caution about the mix of policy, not just tariffs, but regulation, immigration, and fiscal policy, which Powell referenced in the congressional testimony, that is putting everybody on their back heels and saying, look, we don't know where we're going. The market doesn't know where it's going. Everything's treading water right now.
Interesting to see how this is playing out equity-wise, as we're obviously sort of remain near those record highs, but you're pointing out perhaps European shares among the best performing. Why is that?
You know, this is another one of these reversals of Trump trades. People said, oh, you know, Europe is going to go get hurt by the Trump tariffs, and it's going to be a backpedaling for growth in Europe. And now the market, I think, is starting to realize, you know, it might be the case that Europe's industrial policy and its fiscal policy will start to gear itself up for some internal stimulus. And that, in fact, the play, given the valuations are so cheap and the market's so beaten up, is to buy Europe on the idea that all the bad news is priced in. And some of the good news might be that the way this trade war works out is not going to be as favorable to the United States and more favorable to Europe than people think.
What of China? Now, of course, he slapped another 10% on Chinese goods. How do you see that dynamic in trade between the US and China playing out at this point?
They have gamed Trump before with the previous trade war that he did not win, and they've already set themselves up with modest, retaliatory tariffs over the weekend so they can sit down and talk to him, much like the Canadians did, much like the Mexicans did, much like the Colombians did. So I personally think everybody is calling his bluff at this point and saying, look, we'll give you something, and we'll take something off the table and give it back to you, kind of like what he does, and then it won't be much. And so I think everybody's getting into the transactional game with him, where they give him the media hit, they give him the noise, they give him the media victory, and they don't actually do very much. And so I think, again, with China, I would expect this to be the first hand he plays, and then we'll see how it plays out. I mean, the problem here is whenever, his need for media hits, his need to keep himself in the media and keep the base behind him now means he's constantly fishing for other ways to get noise out there that seems to create some commotion, create some interest. So it's impossible to know. So he resolves this China, debacle, and then he gets us into another one, or does he finally get talked out of it by people that are quiet in the back room, or Powell himself, and just say, hey, look, stay with free trade, and stay out of trying to negotiate transactional deals to go with the long trade, term trade pacts. I mean, it's impossible to know if he goes there or goes somewhere else, and I think that's what the market's sniffing out.
You make an interesting point there, John. So do you feel as though perhaps his global partners, his global counterparts, markets have learnt from the first Trump presidency, and it's playing out this way that you don't take him at his word?
Yeah, that's it. Andrew, I mean, we've looked through all these different, Canadian deals, Mexican deals, Colombian deals, and he basically does nothing. It sounds you hear in the news that he's done something or he's gotten a deal out of somebody, but, usually it's a deal that the United States made, 6 weeks ago or 2 months ago or 4 years ago. And it does, this is what happens. So you really do need to understand that he has become master of delivering a soundbite to the base that sounds like he's the rabid dog, that sounds like he's looking out for America, that sounds like he's going to do something terrible, and then he actually does very little. So I think people are sniffing it out, and all the governments around the world are learning this. I think we saw it today, we saw it with Jordan and the whole Gaza Strip debacle, that he's not going to, really send us in there. If he has, he got to go to Congress and the Senate. They have to make the approval of that. And obviously, he doesn't like to do actual negotiations with these people. So I think, you've got a person who everybody talks about his business career, but the truth is, he really was a apprentice media celebrity guy. That was where his success was, and that's where he's learned this game of like keeping in the motion and keeping people interested with the screen-based delivery.
John, let's refocus on US equities now. Of course, we're still in earnings season. What any particular highlights for you? And most recently, we've just had Coke out with results. Is that telling anything about the state of the US consumer at the moment?
Andrew, I think the most interesting thing I've seen is that, the beats are, ratios, revenue beats and earnings beats are pretty strong for tech. And overall, we're going to, well into the double digits for earnings for the entire quarter. So, it's kind of surprising to me that, there really hasn't been enough undercurrents, as you mentioned, the consumer that suggest that we're really not going to get a 10% or so earnings growth rate out of 2025. So I think, in general, you got to see this earnings season as pretty broad based, but also pretty backward looking, because we really, it is the fourth quarter of 2024. It is not this presidency. It is not this year. So I think, again, it's going to be discounted, much like, the inflation numbers tomorrow as backward looking. And we're just going to have to wait probably 6 months, like the Federal Reserve Fund futures say, to a real mid-year checkpoint where everybody says, okay, now we got 6 months in the bin on what's going on with this presidency, and then play from there.
Well, John, let's take a quick look at three stocks you brought to the table for us. The first one being MTU Aero Engines. So this is obviously in the aerospace and defence sector.
Yeah, MTUAY. This is a German aircraft engine maker. They also make turbines, industrial turbines. This is a classic story where we've heard about the recession in Germany. We know about all the problems in the government, and the stock is taking off. So again, one of the things we got to learn here today with MTUAY is there are great industrial names in Germany. They're surrounding the aerospace businesses. Maybe this is Ukrainian military replenishment. Maybe this is the commercial aircraft business. Maybe it's the energy turbines that they make that are actually getting bought up, to produce energy in the country. Who knows? But you got to be really careful, with top line news versus a stock that trades, dramatically well for a year and a half, and you could have almost, made 60, 70 bucks a share in a $170 stock over the last 18 months.
Second stop, Celestica. So this is a electronics manufacturing services company.
Yeah, Andrew, this is an unbelievable story. Look at this chart. If you and I bought this, at $15 a share in mid 2023, we could sell it today at 120. That's a 8 or 9 times X performer in 2 years. So phenomenal run up, and this is basically a benefactor of the AI story. All the data centers that are built, all the capex spending that's being talked about. Because where are you going to get sudden capex done, but then a contract manufacturer with a group like this? So hard to see, how it goes higher, but I see a 150 target price here. I would not be a buyer of these shares. This is a scary looking chart, but if you look at the earnings estimates right here, it's got support and it's not overvalued. So the question here is, where does the AI data center boom go when these types of companies are driving it? And I think that's, really it's a broader question than you might think.
And John, just a quick look at your third stock, Goldfields. This is the South African-based gold miner, of course. The miner's doing very well given the gold price continues to hit new records.
Yeah, Andrew, this is probably a stock and a company that people in Australia know far better than I do. But what I would tell you that's fascinating is, we get the VIX trading at a low of 16 since the election. And actually, options volatility, stock market volatility has fallen since the election. But what has risen the last month is gold's price. And so what does seem to be a new Trump trade is the volatility in geopolitics is driving up people's interest in gold. And it is, and day after day, if you look at the chart of this company over the last month, since the tariff announcements with Mexico and China and all of the follow-up with it, this stock has been going up and up and up. So I think what we got now is a geopolitical safe haven trade, in gold for all this noise that is being thrown up around geopolitics by the U.S. president. So that's what I would point out here. But long term, again, Goldfields, the 10 forward PE stock is really a cheap stock.
John, great to get across what you're seeing there on markets. Thanks for joining us from Zacks Investment Research. Quick look at where we're likely to open at looking for a very flat opening there, and we'll get right across that in just a minute or two. Stay with us.